Alright, guys, welcome to chapter 2 of ICT SMT concepts. This chapter would be more advanced. We'll be talking about drawing liquidity, market maker models, and quarterly theory, and things like that. So, let's dive right into it. So, today we'll be talking about how to find the draw on liquidity, right? So, as we know, markets move three ways, right? Markets tend to try and draw for liquidity, fill imbalances, or come back to equilibrium, which is 0.5 of a range, right? So how do we know that the market wants to either go higher or lower? Well, key difference is we need to know what is being disrespected and what is being respected, right? So if we take a look into this model here, right? If we take a look inside here, okay, we see price moves down, price moves up. You might be wondering why. I touched this a little bit in our video about liquidity, but remember, when price sweeps either side, buy side or sell side, right? In this case, sell side liquidity of the range, typically it will tend to reach for buy side liquidity. However, in this case, we see it doesn't quite reach it, right? This is buy side, right? Now, you might ask, okay, why? Well, if we were to take a look, we'd see that there is an order block and a fair value gap, right? And it respects this order block and fair value gap, and we never tend to see to reach those highs. Once we see that it has never reached these highs and it continues downwards, this is when you know that the draw is currently unclear as liquidity was never swept, right? But as we can see, as price moves down, it sweeps sell side liquidity again, right? So once it sweeps sell side liquidity again, we can see that the draw will most likely be at the next range is high. So when it sweeps liquidity, we see that price reaches for buy side liquidity, right? Now, you can also see this example in this range here, that when price finally reaches sell side, it reaches for buys. It tends to go higher. Why does it go higher? Well, we can clearly see that all bearish confluences, such as bearish fair value gaps right here, another one right here, as well as the order block here, are all being disrespected, which means that we are disrespecting bearish confluences and respecting these bullish confluences, meaning we would like to go higher, which would, in this case, be this draw on liquidity. Now, why is this important? Because it allows us to know when to take buys or sells, right? For example, in this case, we see that price swept buy side liquidity, right? We also see that in this part, bearish fair value gaps are being disrespected, right? This would be our bullish break structure. Now, we know that buy side liquidity has just been swept in this range, meaning that our target next should be this buy side liquidity, right? So we should be looking for buys. As you can see, we sweep, bearish fair value gaps are being disrespected, break structure to the upside. We see price tends to head towards buy side liquidity. Now, let's take an example look at another example right here. Let's see, sell side liquidity is swept, right? And then we head higher, all the way up here, right? To take out this buy side and this buy side, right? This price came in, and you can see it's a little choppy, but as you see here, bullish confluences such as this order block here is being respected, and these bearish fair value gaps are being disrespected, right? So we know that the draw is higher, so we should be looking for buys. Now let's take a look, and let's see over here. In this model, we see that sell side swept, right? So what is our draw? External draw would be this high, right? See how the market always seeks liquidity, right? Liquidity, 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 and then soon after, this liquidity will soon be taken. So will this, so will this. As you can see here, liquidity was swept here, as well as this range. Liquidity was swept here, and we get a big push up, reaching for these buy side liquidity, right? So the market moves based on the draw on liquidity. If we know what the draw on liquidity is, then we know what to look for, right? Let's say we are unsure, such as this, right? We see here that this sell side never swept and this buy side was never swept. You should not take a trade if you do not know what the draw on liquidity is. We can clearly see right after this sell side was taken, right? Which means that if we look in this range, the draw on liquidity will most likely be higher, right? So we will look to see if bearish confluences are being disrespected and bullish confluences are being respected. As we see here, this bearish disrespected, all these bearish are disrespected, and in the end, we reach these highs right here, right? These highs right here. Notice how we never come down to sweep this sell side liquidity until we sweep buy side liquidity, and later on, it's hit, right? It's swept. Now, let's say that price has never swept liquidity. Sometimes, if we take a look at an example, price never sweeps, right? It only keeps turning, let's say, buy side into a breaker structure. Now that is because during this, it's making a market maker model, which we will get into detail in the next video. It generates liquidity for it to be taken later on in the future here, right? As you can see, all these generated buy side liquidity, starting from around here, are all ran through, right? In this part, all ran through, right? And we can see the same thing here. If we take a look at this, all these drawn liquidities here, all these liquidities are building up until the final buy side liquidity is hit, and we see market structure shift, right? Now, because we see this, we know that the drawn liquidity is lower, right? We want to take out all these lows that we've never been able to take out previously, right? Right here. Now, let's say, for example, that market sweeps sell side, but never sweeps buy side. We do not know that the draw on liquidity is clear, right? Unless we know that price is going to come in, come back up. But we can see here that although buy side liquidity was never swept, bullish confluences are being disrespected, right? If we get this big market structure shift right here, we have to assume that price is heading lower. It's going to sweep buy side, sell side liquidity again before going higher, right? As you can see here, all these buy sides have never been swept. You might ask why? That's because if we head on to a higher time frame, we can see that we are currently in a sell position, right? Because all these sell side liquidities must be swept, meaning that these buy side liquidities are made for the next model for when these external draws are to be taken, right? The price comes down to take these lows. We know that the drawn liquidity will all be these untouched buy side liquidity, right? So price would have higher. This is just a simple understanding of the drawn liquidity. But if you look at the charts, you will see that price always reaches for liquidity. This is how the market moves. By understanding that the drawn liquidity is either higher or lower, you can scroll down into different time frames and understand and look for the confluences you need to be looking for. I hope this video is helpful. If you have any questions, let me know. But as